Dear students, I am Dr. Panduranga Nayak, Principal of Swiss College, Bengal. In the last class or in the last video, you were learning about valuation of perquisites, and that already you have learned the valuation of some of the perquisites like valuation of rent-free accommodation, concessional accommodation, and then motor car. So such other things. Now we'll go ahead with some more perquisites, how they are going to be valued. So we'll take up one by one. Yes. Now supposing the service of the domestic servants is provided to the employee by the employer, and how it is to be valued. So domestic employees means, for example, sweeper, gardener, or watchman, something like this. So these services are provided to the employee by the employer. Now how that should be valued and what is the value of the perquisite? So cost to the employer, whatever salary has paid to the employee and whatever expenses incurred, so that should be taken cost. Deduct if any amount recovered from the employee. If any amount is recovered from them, that should be deducted. The net amount is taken as perquisite value of services provided to the employee in the nature of sweeper, gardener, or personal attendant. Okay? Yes. Next, supply of gas, electricity, or water for household consumption. So here it involves two things. Whether that is procured from outside and then provided to the employee, or that service is owned by the employer. First one, let us say the employer does not own these services. Actually, he has to hire or he has to procure from outside, like gas. Employer's company is not a company which provides or supplies gas or electricity, etc. So it is procured from outside. In that case, whatever amount is paid to the outside agency, that should be taken as perquisite value. On the other hand, let us say an electricity company, say BSNL, it provides free electricity to the employees. Or gas distributing company, let us say, it gives free gas to the employees. So this is the second situation. If the resources are owned by the employer himself, then what is the manufacturing cost per unit supply? So whatever example I gave you, that is regarding distribution. But here, if it is owned, that is manufacturing cost per unit supply, that will be taken as the perquisite value. So if the employer procures it from outside, whatever amount has been paid by the employer to the outside agency for providing that facility, so that is taken as perquisite value. On the other hand, if the employer himself owns that, then unit cost of the that service supplied to the employee by the employer, that is considered to be the perquisite value. Let us move on to the third one. Education facility is provided to either the employee himself or to the children. So especially here to the children of the employee or any member of his household. Okay, if the cost of education per child does not exceed 1,000 per month, then it is not at all taxable. So education facility to the member of his household, and there again free education to children in the school maintained by the employer or the school sponsored by the employer. Let me make it very clear. Free education to children in the school maintained by the employer. The employer himself is running some educational institutions, or he does not own it or does not run the educational institution, but he will sponsor that in some other institute. So sponsored by the employer. In that case, if the cost of education per child does not exceed rupees 1,000 per month, then it is not taxable. If it exceeds say 1,000 per child per month, then cost charged in similar institute in the local area without deduction of rupees 1000 per child. Supposing it is say 1800 per month in the nearby educational institution, then you have to calculate 1800 per month into 12 per child. That has to be calculated that way. And if it is provided in other schools and for other members of the household, then the cost to the employer, whatever the employer pays for that service, that is the perquisite value. But if any amount is collected from the employee, then that has to be deducted. Even in this case, if any amount is collected from the employee, then that much of amount should be deducted from the perquisite value. So this is about education facility to members of his household. Let me reproduce again. Now the question is whether the education is provided to the children of the employee or to other members of the household of the employee. First one, education to children in the school maintained by the employer or the school sponsored by the employer. So here, if the cost of education per child does not exceed 1000, it is not at all taxable. But if it exceeds 1000 rupees, then whatever amount is incurred, whatever expense I incurred, that is the perquisite value. And the cost charged is similar in the similar institutes in the local area without deduction of that 1000. That should be taken as perquisite value. Of course, if any amount is recovered from the employee, that will be deducted. But if the education in other schools, not at all sponsored by the employer, and similarly for other members of the household, other members of the household means maybe for example, brothers' children, sisters' children. So that way, any relative may be studying at your house. So education expenses are provided by you. Then if that is reimbursed by the employer, then whatever the cost is incurred by the employer, that itself is the perquisite value. But if any amount is collected from the employee, that will be deducted. I will move on to transport facility, where an undertaking is engaged in the carriage of passengers. So employer's undertaking itself is engaged in the carriage of passengers or goods. And it provides to any employee or any member of his household. This service is provided either to the employee or any member of his household. For what? For a private journey or private journey free of cost or at concessional fare in any conveyance either owned by the SSC employer or taken on lease or made available by any other arrangement by the undertaking. Okay, for the purpose of the transport of passenger or goods, the value of benefit or amenity, means facility, shall be the value at which such benefit is offered by the undertaking to the public. As if, say, supposing the service is provided to any public, so what cost will be taken or incurred? That will be taken as the perquisite value. But if any amount is recovered from the employee in connection with that, the net value is taken as the perquisite value or taxable value. So let us go through that once again. Where an undertaking is engaged in the carriage of passengers or goods. So your employer is an undertaking, that is transport undertaking. It is engaged in the carriage of passengers or goods. And it provides to any employee or any member of his household a private journey free of cost or concessional fare. One is free of cost. The other one is not free but at concessional fare. In any conveyance owned or leased or made available by any other arrangement by the undertaking for the purpose of transport of passengers or goods, the value of park visit or amenity shall be the value at which the benefit is offered by the undertaking to any public, as if you are rendering the service to the public. So that should be valued. What value or what amount you collect or what amount you charge, so that is taken as the park visit value. Less if any amount is collected from the employee, in other words, that is concessional, not totally free, in that case, that amount should be deducted and the remaining amount will be taken as park visit value. Okay, now we'll take up some more park visits. We call them fringe benefits or amenities. Fringe benefit means any benefits available or made available to the employees other than salary, wages, etc. Okay, one is interest-free or concessional loan. So loan is provided to the employee. Okay, where the amount of loan in aggregate during the previous year does not exceed 20,000. So loan is made available to the employee or granted to the employee, and the aggregate amount of loan advanced to the employee in the year does not exceed 20,000. Then the park visit value is taken as nil. Absolutely, it doesn't have any taxable park visit value. Where the loans are made available for medical treatment in respect of diseases specified in Rule 3, example cancer, tuberculosis, AIDS, etc., the value will be taken as nil. So where the loan is made available for medical treatment in respect of specified diseases as given in Rule 3, in example cancer, TB or AIDS, etc., the value shall be taken as nil. However, the exemption shall not apply to so much of loan as has been reimbursed to the employee under any medical insurance scheme. So from the loan, that is amount reimbursed by the insurance company to the employee, that should be deducted. If the exemption shall not apply to so much of the loan as has been reimbursed to the employee under any medical scheme. So if the amount is more than 20,000 in the year, then interest on that loan, that is to be taken as taxable. And for that purpose, if any amount is recovered from the insurance company, that should be deducted. Okay, here interest is calculated with reference to State Bank of India. Supposing State Bank of India charges, say, 12% interest per annum, and the employer provides the loan to the employee at 7%, then the concessional interest on loan is 12% minus 7%. 5% is the concessional interest, and that is the taxable park visit. Okay, next, holiday enjoyment. The value of traveling, touring, accommodation, any other expenses paid for or borne or reimbursed by the employer for any holiday avoided by the employee or any member of his household shall be the amount of expenditure incurred by the employer in this behalf. So park visit value is any value of any traveling, touring, accommodation or any other expenses paid for or borne or reimbursed by the employer for any holiday avoided by either himself or by any member of his household. So that shall be the amount of park visit. Amount of expenditure incurred shall be the park visit value in this respect. However, this rule shall not apply to leave travel concession. This is a separate park visit, so that is to be taken separately. Alright, where such a facility is maintained by the employer and not available uniformly to all employees, the value of benefit shall be taken to be the value at which such facilities are offered by other agencies to the public. So it is not uniformly made available to all employees, but that facility is maintained by the employer. In that case, how you are going to value that per visit? So it is as if you offer the service to the public, and what cost you collect for that, that will be taken as the per visit value. The value of benefit shall be taken to be the value at which such facilities are offered by other agencies to the public. So there are other competitors or other agencies, they charge the employee, so that will be taken as the value of per visit. If such facility is maintained by the employee and it is made available to all employees uniformly, the value of benefit shall be nil. Because it is made available to every employee uniformly, so per visit value is nil. Whereas if it is not free, not uniformly provided to all employees, in that case, the value shall be the value at which that service is provided by other agencies to the public. So that will be taken as per visit value. Let me read once again all the 3 points. The value of traveling, touring, accommodation or any other expenses paid for or borne by the employer or reimbursed by the employer for any holiday availed by either by employee or any member of his household shall be the amount of expenditure incurred by the employer in this behalf. However, this rule shall not apply to leave travel concession, which the topic about which you already studied elsewhere. Where such facility is maintained by the employer but not available uniformly to all employees, the value of benefit is the value at which such facilities are offered by other agencies to the public. So that will be taken as model price or value or representative value. But if it is provided to all the employees uniformly, then the per visit value is nil. Where an employee is on official tour and expenses are incurred in respect of any member of his household accompanying him, then the amount of expenditure incurred by the employer shall be value of amenity. So if he is on official tour and along with him, if he takes someone from his family, we call that any member of his household, then only that much will be valued as per visit, whereas employees' expenses will not be taken, that will be taken as for official purpose. So as far as the member of household is concerned, the amount of expenditure incurred by the employer shall be the value of amenity. Okay, where any official tour is extended as a vacation, the value of the benefit will be limited to the expenses incurred in connection to such an extended period of said vacation. Extended period or for that vacation, okay? Extended period of leave he takes, or vacation he enjoys. So that will be taken as the per visit value. In all the above cases, if any amount is recovered from employee, such amount shall be reduced from the per visit value. Okay, next one, free food, etc. Say at the place of work, free food might be supplied by the employer. Now the question is whether it is exempt or taxable. So how you are going to treat it? The value of free meals provided by the employer shall be the amount of expenditure incurred by the employer. So value of free meals provided by the employer shall be the amount of expenditure incurred by the employer. That will be taken as per visit value. However, the following are not per visits. For example, free meals provided during the office hour at office or business premises up to ₹50 per meal. If the price of the or value of the meal is up to 50, then it is not taxable. Supposing if it is 60 per meal, in that case 60 minus 50, 10 per meal per day for the entire year, that is taxable. Free meals provided through non-transferable paid vouchers usable at eating points of the value thereof up to 50 per meal. So non-transferable paid vouchers, some tokens are provided. You need not pay for that. So with the help of that, if you have availed the meal at eating points, the value thereof up to rupees 50 per meal is exempt. If it is more than that, the difference is taxable. Tea or coffee or similar non-alcoholic beverages, soft drinks served along with or snacks provided during the office hours like biscuits etc. provided along with the tea. So that is exempt, but this is during office hours. Okay, and then free meals during working hours provided in remote area or an offshore installation. What is remote area or offshore installation? You have already learned in another topic. So in all these cases, yes, you have to value the per visit when there is supply free food to the employees. But in some cases that is exempt only if the value exceeds rupees 50 per meal, that will be taxable. And then again it might be provided through non-transferable paid vouchers. Then also if it exceeds 50 per meal, then it will be taxable, but otherwise it is exempt. Tea, coffee or similar non-alcoholic beverages served during the office hours or snacks provided during the office hours, that is totally exempt from tax. And free meals during working hours provided in remote area or an offshore installation, that is totally exempt whatever may be the cost. It need not be up to 50 rupees. Gift in cash or gift vouchers etc. which are convertible into cash are fully taxed. So gift is given in the form of cash or gift vouchers which are convertible into cash or encashable into cash. They are fully taxed. No exemption is available for that. Where the gift voucher or token in lieu of which such gift may be received by the employee, or by the member of his household, the value of such gift shall be sum equal to the amount of the gift. So instead of giving it in cash, gift voucher is provided or token in lieu of which gift may be received by the employee or a member of his household. The value of such gift shall be the sum equal to the amount of the gift. What is the value of that gift? That is taken as the per visit value. The value of such gift or voucher or token is rupees 5,000 or less in aggregate. This is very, very important. In aggregate, if it is not more than 5,000, then it is exempt. The taxable value is nil. But if the aggregate value of that is above 5,000, then the entire value is taxable. Not just any item which is above 5,000. Entire amount is taxable. So this point you have to remember. So thus, individually, the value of gift might be less than 5,000. So you cannot consider that exempt because the aggregate value you have to take. If the aggregate value during the previous year is more than 5,000, then the entire amount is taxable, not above 5,000. In other words, supposing the aggregate value is 8,000. It is not 8,000 minus 5,000. The entire 8,000 is taken as per visit value. No exemption is provided. So this is what you have learned in this video. Some more per visits will take up in the next video. Thank you.